The Dow Jones drops 245 as economic woes batter stocks. And what can only be called an economic smackdown or catastrophe, stocks suffered their worst losses in 5 weeks. The drop was set off by earnings from Intel and Time Warner, an announcement of huge job cuts at aluminum giant Alcoa, and new signs of a rapidly weakening jobs picture. And to make matters worse, falling demand and a report showing much larger domestic oil inventories sent crude oil plunging more than 12% to $42.63 a barrel in New York, destroying or wiping out all of its gains for the year so far. At the close, the Dow-Jones-Industrials were down 245 points, 2.7% to 8,770. The Nasdaq Composite Index had shed or lost 53 points, 3.2% to 1,599, and the Standard & Poor's 500 Index had lost 28 points, 3% to 907. The losses were the worst for the major indexes since December 1st of last year, when the Dow fell 680 points. The abrupt suddenness of the sell-off came because traders realized it was impossible not to forecast in a recession. When reality hits, it can shock people. Again, when reality hits, it can shock people. Stocks in India were rocked when the chairman of one of the country's largest information technology companies admitted he concocted or made up key financial results, including a fictitious cash balance of more than $1 billion. Mumbai's Sensex index fell 7.3%. The oil price plunge punished energy stocks as a group that had been among the strongest segments of the market. ExxonMobil was down 2.6% to $78.25, and Chevron down 4.4% to $73.96. Intel sales take a dive. Intel Corporation said fourth quarter revenue would fall 23% from 2007 levels because of weak demand. Intel said revenue would be $8.2 billion, short of the consensus estimate of $8.74 billion and lower than the company's previous guidance of $9 billion. Intel ships approximately 80% of the world's microprocessors. Shares from Intel, a Dow component, fell 6.1% to $14.44. The announcement also slammed shares of most semiconductor companies. 18 of the 19 stocks in the Philadelphia Semiconductor Index were down today. The index was down approximately 5% to 223. Only 3 of the 30 Dow stocks were higher on the day, with General Motors up 4.8% to $4.13. That was the automaker's first close above $4 since December 19th. Some other gainers: Verizon Communications and Coca-Cola. Only 44 S&P 500 stocks had gains today. Alcoa to cut jobs. Shares of Alcoa were down 10.2% today to $10.89, the worst performer of the 30 Dow stocks. Late Tuesday, the aluminum maker said it will now eliminate 13,500 jobs, or 13% of its workforce, in an effort to combat the global economic slowdown. And also, some 1,500 contract workers will be cut. The moves will result in a fourth quarter change of $900 million to $950 million, or $1.13 to $1.19 a share. Alcoa's measures will lower annual output by 18%. The company also has projected capital expenditures would fall 50% in 2009 to $1.8 billion. And a huge hit to private sector jobs. There was more terrible news about unemployment. ADP, Employer Services Payroll Survey, showed a staggering loss of 693,000 jobs in December alone, far worse than economists had expected. The ADP report comes just 2 days ahead of the government's monthly report on non-farm payrolls, which is expected to show a loss of at least 500,000 jobs in the last month of 2008, wrapping up one of the worst years for job losses since the end of World War II, if not ever. Friday's report is also likely to show that the unemployment rate rose to 7% from 6.7%. The ADP report measures non-farm private employment using payroll data representing approximately 24 million employees working in all 19 of the major North American industrial sectors. A separate report from outplacement firm Challenger, Gray, and Christmas showed the worst December since reporting or tracking began in 1993. December job losses at big companies around the nation soared 275%. That's a lot. From December 2007 to 166,348, Challenger's report said. The financial services sector was hit the hardest in December, accounting for approximately 1/4 of the losses. And for all of 2008, the financial services industry announced plans to cut 260,100 jobs, almost as many as the telecommunications industry cut in 2001 and 2002 after the end of the dot-com bubble. And more news. Russia halts gas flow to Europe. The dispute between Russia and Ukraine over a natural gas pipeline is starting to affect Europe. The two countries blame each other for the standoff, which started on New Year's Eve when they couldn't agree on a pricing deal. European supplies that pass through Ukraine are slowing just as winter temperatures are starting to set in. 80% of Russian gas is shipped to Europe through Ukraine. Eastern European countries, including Bulgaria, Greece, Macedonia, and Serbia, have reported halts in their natural gas shipments, and countries farther west, including France and Austria, have reported a huge drop in Russian supplies. Meanwhile, crude oil slid after the Energy Department's weekly inventory report showed a much bigger than expected increase in oil supplies. So then, how low will oil go? Oil supplies rose by 6.7 million barrels last week. Gasoline inventories were up by 3.3 million barrels. And distillate stocks rose by 1.8 million barrels. And all these, once again, are more signs of the times. The economy is getting worse rapidly. The more jobs that are lost, the more it ripples out to other sectors of the economy. It's the ripple out effect. And in turn, that ripples out some more, causing more job losses. So, if there's no jobs, then there's no economy. And all these things are connected to the end times transition days. And once again, there are many signs all around